Hey friends, Melissa Wick here. Today we're going to talk about buying and selling a business. So I've helped a few people through these transactions, and a lot of times I've noticed that people really see what they want to see when it comes to buying a business. So let me give you an example. So let's think of you're thinking of buying a business and maybe you're thinking like, this is a great deal, or I'm perfect. I'm the perfect person to run this business, or maybe like my life's going to be amazing when I run this business and when I own this business. So if you're thinking that, you're looking at everything with rose colored glasses. And so what will happen is that your brain will legitimately find only evidence that supports your thinking, which if you're thinking this is going to be great and amazing, you're going to find evidence for that very easily. And what happens when your brain only finds evidence to support the thought, this business is amazing, what a deal, you tend to overlook certain things. You might not want to look at maybe the negatives of the deal. So we're going to talk today a little bit about why you should hire some experts whenever you're thinking of buying a business. For instance, like get a lawyer, and second, get an accountant. So we're going to go through some moving parts of these transactions. So first thing you should know is there's generally two ways that you can buy a business. One way is an asset purchase, and the other way is a stock purchase. So the first way, an asset purchase, is generally more favored by buyers. And the reason is that you're buying specific assets and you're assuming certain liabilities, and you buy each individual item, right? So you can cherry pick what you want and what you don't want very easily in an asset purchase agreement. So if you like certain assets, and then there's certain assets that you don't think are worth the money, you can sort of take those out of the deal, right? So that's great for a buyer because you get to look at all the assets and you see each thing, and you're specifically buying each thing, or you're specifically assuming each debt. So generally it's a more transparent type of interaction because you understand exactly what you're buying and for what price, and you can structure it in a way that makes sense to you, in a way where you've cherry picked what you want. And generally for buyers, an asset purchase agreement is a tax friendlier option. The second way you can purchase a business is through a stock purchase agreement. Generally, these agreements are more straightforward, and the risk for buyers is that you're not really getting into the nitty gritty. You're buying stock. So with that purchase comes all the assets, all the debts, and all the rights to run that business. But the problem is sometimes certain assets or debts aren't disclosed as fully as they should be, but you've purchased the stock. So with that stock comes along the whole company. So stock purchase agreements are generally more straightforward, and sellers like them because it's more tax friendly to them. And additionally, the whole business goes with the stock in most cases. Whatever way you decide to buy a business, whether it's through an asset purchase or a stock purchase agreement, you need to do a few things to make sure that the sale is going to be beneficial to you. Overall, this is called due diligence. And I'm going to go through just a quick checklist of what you ought to do in your due diligence if you're considering buying a business. The first thing you need to do is evaluate the financials. And this is pretty much common sense, but I'll tell you that what you need to do is hire somebody who can sit down with you and help you analyze those financials. Right? Because if you're looking at this with rose-colored glasses, if you're scanning this with a brain that's wanting to buy the business, you're going to have a tendency to overlook some of the liabilities. You need somebody to kind of guide you that has a more neutral position and a more neutral perspective. So I'm going to give you a due diligence checklist so that you can have at least a general idea of what you should be looking at if you're thinking of buying a business. So due diligence just means that you're going to do some snooping around. You're going to want to look at the books. You're going to want to understand how this company is running, what the assets are, what the debts are. That's just the very basics, right? And so I'm going to tell you that you probably ought to, the first thing you need to do is hire an accountant to sit down with you and go through this stuff, right? So you're going to look at the books. You're going to look at some key financial indicators such as sales, debts, profits, expenses, cash flow, those sorts of things. And then the second thing you want to do is look at the ops, right? Look at how the company is operating. And what I mean by that is look at like the working capital of this business and sort of see what comes in, what goes out each month, and understand how the business is running. What are the expenses of this business? how does the business pay for those expenses? The third thing you're going to want to do is look at entity status. So basically, this is pretty simple, but you're going to want to look at the governing documents of the company, right? You're going to want to make sure that you understand how the company's been run, that you understand who the partners are, who's going to be selling the company, who are the players of this transaction. And you want to look at like any corporate resolutions or minutes that the company has taken over the years so that you understand what decisions were made. It'll give you a nice picture of how the company's been managed and run. And that way you'll understand, what the assets are, what the debts are, if there's outstanding debt, if there's, accounts receivable, all that stuff really matters in the transaction. And generally a company that's been well run should have those records for you to review. The fourth thing to look at is taking a look at like the outlook for the company, right? Like understand like what market trends are, is there going to be a big shift in market trends that would make this company less valuable for some reason, right? So that's another important part of buying a business, is just looking around and seeing like, who's the competition? Is there new products or new services coming into the market that would make your particular company less valuable or less ideal for your particular customer? And the fifth thing is understand what assets are on the table, right? Understand what you're buying. And then in that, you need to consider if there's intellectual property rights, like how do those transfer? And then what's the scope of that transfer, right? And how do you protect it? So that's another pretty big consideration. If you're buying an already existing business, there may be trademarks, there may be some intellectual property that goes along with that purchase. And so you want to make sure that that's included, and you want to make sure kind of like what the parameters are and how you're going to protect that going forward. And the sixth thing I want to talk to you about when you're doing your due diligence is to take a look at permits and licenses, right? So if you're buying a business where, maybe you're buying some assets that have been like certified, or there's certain permits necessary to run this business, you need to make sure that those certifications or permits are all valid and accurate and in effect, right? You don't want to purchase a business and then find out that actually you need to renew a certification or pay for, your license to be renewed, because that's a cost you'll have to incur and likely some legwork you'll have to incur. And then worst case, maybe your business has to stop while you're messing around getting yourself recertified or obtaining the right license to run the business. So that's the sixth thing I would say, is just take a look at licenses and permits and certifications to make sure that, those are all valid and don't need to be renewed anytime soon. Okay, friends, there's a lot to consider if you're thinking of buying a business. And as always, I'm going to tell you, you need to hire a lawyer to help you walk through this transaction, and also an accountant. If you need help with this, Wick Law loves helping people buy businesses. So don't hesitate to reach out if you have any questions. Again, my name is Melissa Wick, and I run Wick Law Offices, a small business law firm here in Columbus, Ohio. Thank you for watching.